Okay, so two respected analysts just published directly conflicting reads on Bitcoin, and one of them is about to look either really smart or really wrong. Let's figure out which. CTO Larsson is showing a 2-year support level at 60,800 on Bitcoin. He's overlaying the S&P 500 chart on top of it. The argument is clean. Crypto isn't decoupling. It's tracking equities. When stocks dip, Bitcoin dips. When stocks rally, Bitcoin rallies. He's essentially saying, if you want to know where Bitcoin goes, stop looking at on-chain data and just watch the S&P. Bitcoin is sitting around 63,494 right now, up about 0.78% in the last 24 hours. The fear and greed index is at 23 out of 100. Extreme fear. That's the emotional context. Everyone's nervous, but InvestAnswers is looking at the exact same price action and seeing something totally different. James is pointing to a volume flip, a specific pattern where retail money starts rotating into crypto before equities actually bottom. It's a contrarian signal. It says bottoms happen in fear, not in confidence. And the volume pattern he's tracking says that flip has started. So here's the conflict. Larsson says crypto is a passenger. It goes where the stock market goes. InvestAnswers says crypto is signaling a bottom before stocks even know they're bottoming. One of them is reading a leading indicator. The other is reading a lagging one. Bitcoin's actually held that 60,800 level twice in the last 2 weeks. That's meaningful. Support levels aren't mystical. They're just places where enough buyers showed up last time that they'll probably show up again. The question is whether those buyers are there because they believe in Bitcoin or just because they're watching the S&P and buying dips reflexively. The S&P 500 is up 1.08% today, sitting at 7,500. NVDA is up 2.95%. Tech is bid. Equities are holding up. If Larsson's thesis is right, if Bitcoin is just following stocks, then we should see Bitcoin rally when the market rallies, and we are seeing that. Bitcoin's up 0.78% on a day the S&P is up 1.08%. That tracks. But here's where it gets interesting. The volume James is watching isn't daily volume, it's accumulation. It's who's actually buying at these prices. And he's saying that's shifted. Retail is rotating into crypto. That doesn't contradict the price correlation with stocks. You can have crypto tracking stocks and smart money rotating into crypto ahead of the bottom. They're not mutually exclusive. The real question is, which signal is predictive? Does the technical support level hold because it's a real support level, or does it hold because traders are just reflexively buying Bitcoin whenever they buy stocks? Because if it's the latter, Bitcoin doesn't find a bottom until the S&P finds one, and nobody knows when that is. Larsson's tracking a technical pattern. That's data. That's testable. Support at 60,800 is either going to hold or it's not. James is tracking a behavioral pattern where money is flowing. That's also data, but it's harder to call in real time. Volume can reverse fast. Here's what I'd be watching. Bitcoin dominance. It's at 56.2% right now. If Larsson's right, if crypto is just following equities, Bitcoin dominance should stay flat or drop when altcoins underperform. If James is right, if retail is rotating into crypto before equities bottom, Bitcoin dominance should stay elevated or climb as money flows into the most recognized asset. The other thing worth tracking is whether Bitcoin actually decouples from the S&P over the next 2 weeks. If they stay locked together, Larsson wins the call. If Bitcoin breaks higher while equities are still uncertain, James wins. It's a concrete test. MicroStrategy holds 815,061 Bitcoin at an average cost of about 75,527. Michael Saylor didn't sell. He's holding. The U.S. government has about 328,000 Bitcoin from seized assets. These are holders, not traders. Nobody's panic selling here. That's a floor of sorts. But Satoshi Nakamoto's estimated holdings, about 1 million Bitcoin, unmoved since the early days, is the real background. If we're actually bottoming, Satoshi's stash is starting to feel less like a theoretical risk and more like floor support. It's been unmoved for over a decade. That matters. The thing is, both analysts could be partially right. Crypto could track the S&P on the way down, establish a support level around 60,800, and still see retail rotate in aggressively once the fear hits the right level. Support levels don't prevent rallies. They enable them. So here's my actual take. Watch the next 2 weeks. If Bitcoin holds 6,800 and the S&P is still grinding sideways, Larsson's support level thesis is working. If Bitcoin breaks below 6,800 and the S&P breaks too, he's right about the correlation. But if the S&P drops below key levels and Bitcoin holds 60,800 tight, then James's volume flip is the real signal and crypto bottoms first. This isn't one or the other. It's a sequence. Larsson is probably right about the near-term correlation with equities, but James might be right that the real bottom happens when everyone's scared enough that they accidentally start buying the dip, which is, how every bottom works. Drop a comment. Are you betting on decoupling or just riding the S&P down? And if you want the full breakdown on how big money actually positions into these kinds of reversals, I went deeper on that in a recent video, link in the description. If this kind of second-order thinking is useful, subscribe. More of this every morning. And here's the absurd kicker. A guy in Ohio used his deceased cousin's birthday as lottery numbers and won exactly $100,001. Not 100,000, not 100, 100, 100,001. The universe occasionally has a sense of specificity. Sometimes the joke lands perfectly. Sometimes it's just math. Thanks for watching. If you want more of this every morning, subscribe and I'll see you tomorrow.